Hi guys, bro, ain't nobody can see you again. Oh, okay, right. This is day 7 of the 30 days teaching this guy how to trade. Today is gonna be liquidity sweeps, right? So it's it's quite easy to understand, but at the same time it's not, right? But just I'll try and explain it as best as I can, right? And for people watching this as well, right? So basically, a liquidity sweep is, right? What is a liquidity sweep? It's basically like a mm, I kinda it's basically like so you get you know what liquidity is? I've not yeah, it's parts of like liquidity is what moves the market. So I see if there was no liquidity the market couldn't move, right? So basically liquidity is like previous highs and previous lows. So see that in the market you see like highs and the lows. That's like the resting liquidity. hmm Aye. So say the market wants to move like quite a good bit, right? It needs liquidity to move. So what it's gonna do is it's gonna go back down to previous areas of where the liquidity was sitting. Yeah, aye. And then it will take that liquidity and it needs that to move on higher or lower down. It sweeps it. That's called a liquidity sweep where it takes all the orders and then it goes up higher or whatever, lower down. So I've kind of drawn an example here. It's pretty ass, right? But we move right. So basically, right. Pretend this is like fucking previous day, right? Previous day, right? This right here. This is previous day market. All of this here, right? And then pretend this is pretend this is market open. Right. So this is market open right here. So bang, market open, right? Right there like that. So look what happens. Look, so market comes all the way down. Previous day, right? This is a previous day down here, right? So look what it does. Look, the market. You think, oh, maybe it's going to go up. Look, bang, it's coming down. Takes liquidity for there, like resting orders, and then breaks structure for here above that low or that high there, and then it pushes on higher up because it needs liquidity to move. So what it's done is it's came all the way down here, and people might think, oh, we need to sell, we need to sell right here. So they go, oh, put my short position in. Fuck's sake, what the hell? Just how is that so bad? Put their short position like all the way down there. Stop there. Like this is like really new people that would do this, right? So they think, oh, the market's going down, bang, it comes all the way down, you think you're winning, and then it just reverses. It's called a liquidity sweep. So it's basically like a manipulation. So see when market opens in New York time, for us it's 2:30, but in like New York and shit, it's America, it's like 9:30 I think. Basically what the market does is there's always manipulation before, like as market opens, there's always a form of manipulation, and then it does its move. Um, so that's what a liquidity sweep is. So it comes up, takes a previous low or a previous high, and then it moves on higher or lower, right? So I'll do like another drawing it the other way around. So say you're gonna, and then it's good. Oh wait, it's pretty hard to like draw this shit. There, right, you're right here. Then bang, this is market open right here. A mountain. Oh, oh hell nah. Wait, right, then this is previous day, right, and then this is market open right here. Market open. I know. For said it looks like a ghost, right? Market open, right? Bang. This isn't actually the time market opens, right? But pretend this is market open. So what price can do is, so you see this previous day right here, right? Fuck's sake. Right, so you see this previous day right here, this high here. I know. Right, you see this high here, the previous day high. Um, previous day high, it says that in the name, is basically like what the market done the day before. The highest point or the lowest point what market done the day before, right? So This is it here, right? Buying market open. What price can do if it wants to go down, it could go like this. It could go up, bang, you think, oh, we're going up, bang, takes liquidity, and then moves on further down like that. So, liquidity sweep, like right here. That's the liquidity sweep right there. Um, so I liquidity sweep, then you see the breaker structure right here, and then you'd look for a confluence, you'd look for a fair value gap or a equilibrium getting filled, could fill a fair value gap, and then you would think about selling, and then you would win. Yeah. So do you kind of get? Do you kind of get it?
Yeah, yeah.
Right. Right. This is gonna take quite long. Well, I don't know.
I reckon it'll
No,
be a long video for us too.
no, it's gonna take long to find find like a liquidity sweep because
Let me see if
an
I can
example.
try and see a liquidity sweep.
Right, I'm gonna try. Wait, let me find one
So
first.
what about that there?
That,
Is that not a
yeah.
liquidity?
Well, it did sweep liquidity,
Yeah.
so you could be. That was right. But I want to find one where market opens. So for us, it's 2:30. So 2:30. Market. I don't know if it done it today. Oh, it did do it today. Look. Oh wait, this isn't. Wait, what date? No, this is yesterday's, right? So look what market does. 5 minute time frame, right? So market opens here, right? We got this is wait, yeah, this is previous day highs here, right?
Yeah.
There and here, right? Just because it didn't reach that one doesn't mean you say it's not a liquidity sweep, right? So that it didn't hit that one, so we can take that away, but it reached this one here and all these here, all these wee highs here. So you see, oh, market's going down. You might think, oh, we're gonna sweep liquidity here.
Yeah.
You could actually win both ways. You could have been patient and won that way, or you could have just done it from here and won. I won that day actually. That's how I won actually. I traded yesterday and I won here.
Yeah.
Because I went long and I targeted that area liquidity. What you could have done is market comes down and it takes out this look. I think that was it takes out Asia session low, right? So that's a liquidity sweep. So you see it there, bang comes up, but then look, this is like a weird one because look, we sweep here and we sweep up here, so we sweep both of them.
Mm.
So you go there, liquidity sweep, and then yeah, the people that entered there went on 1 minute time frames or whatever, entered one. Then you get people that could have been a bit more patient to see, alright, or they might have missed that or something. They see, oh, liquidity sweep up here, bang, break a structure, look for a continuation confluence. There's one right there. Then wait for it to close below the candle. Then you would enter. You go short. I'd go in the 1 minute time frame. Then that'd be your win. So that's a. I mean,
Yeah. I kind of like the 1 minute time frame.
1 minute time frame. I've got to teach you all of that.
Yeah.
Like everything, like what I do. So I'll let me find another example, and then you
See
can.
the 5 minute time frame. It takes long, but it's actually like see if you're. I would think if you're starting out trading, see because the time it takes longer for candlesticks to form, so you get to understand the markets better,
Mhm.
and it's easier to execute a trade. But when you're
Yeah.
in the 1 minute, it's
Quicker.
it's quicker, and even if you fail a trade, you can revenge trade pretty much.
I bet you don't want a revenge trade. That's one thing you don't want to do is revenge trade.
Yeah,
Never anyone watching this don't revenge trade, please. Don't. But Uh, no, I'll only show another example because I pretty much did show two examples. But
yeah,
you got that. What else was I gonna say? I time frames. So what I normally do and what the majority of other people do is they look like most people go in the 5 minute time frame and look at the confluences. They find confluences, then they scale down into the 1 minute. The 1 minute shows you more stuff. So say you're on the 5 minute, right, and you see. So you're on the 5 minute, right? You see, oh, fill this fair value gap right here, but you need to wait for it to close under, so it's been filled, right? But that'll take 5 minutes for that candle to close. So then what you can do is go like that. When it gets in there, you can just go to the 1 minute. I don't know if I can find it, but I can't be asked finding it. I think I did find it actually. We'll just say it's there, right? You see it, candle close. I don't even know if that's it, right? But candle closes, and every candlestick is 1 minute it takes for them to form, so you're gonna execute quicker. So
Yeah.
see when you see it, oh, it closed there, then you would enter in the 1 minute time frame, and then instead of you waiting 5 minutes, and that's you just executed when people in the 1 minute would have executed like way quicker. Um, but the 1 minute's quite crazy at times. It like goes like up and then mad shit. But that is liquidity sweeps. Um, yeah, you can literally watch other videos as well on it. Like you'll be able to see like the best person to watch. I know I keep glazing him, right. I need to stop glazing him, right. TGR, man, oh my days. He's the go at explaining anything. I don't know. It's so much easier to understand what he's talking about. But yeah. So like this video, I think I explained it quite well. But other people with more experience, obviously people that have been doing it for years, like longer than me, will know more about it. So even search it up after. It's like I explained it the way I would explain it, but yeah. But day 8 tomorrow, we're gonna be doing. It'll be a quick one. It'll just be sessions. So like what time sessions are at and like where you mark them and that. But that's it. So goodbye.